When Shahi Sundaram Berhad sold his company to Shahira Sundaram Berhad, Shahi Sundaram Berhad ceased to exist. Hence, we should properly close the books of his company. This would be the second step in the process of absorption. Firstly, the sale of business must be recorded. When Shahi sells off his company to Shahira, she is owing to him. The treatment is similar to the recording of account receivables. Hence, the purchase price of 356,000 should be debited to Shahira and credit realization. The realization account acts as either the profit or loss upon winding up. Next, all net assets taken over must be recorded. When the asset and liabilities of Shahi is taken over by Shahira, the amount in the individual asset and liability accounts should be closed. The amount written off should be at net book value as stated in the statement of financial position. Hence, liabilities should be debited and assets should be credited. The remaining figures represent the amount for realization account. Thirdly, record the price consideration received. In this situation, ordinary share capitals in Shahira of 300,000 and preference share capitals of Shahira of 56,000 will be debited. Then, credit the buyer Shahira at 356,000. Next, transfer the price considerations received to capital. Debit the capital account at 356,000. Then, credit the ordinary share capitals in Shahira of 300,000 and preference share capital of in Shahira 56,000. Finally, input the missing figures, which is 25,000 on the debit side of realization and credit side of capital account. To ensure all transactions are recorded correctly, both accounts must be balanced.
The next step in the process of absorption is recording all the transactions in the books of buyer. When Shahira Sundaram Berhad acquired the asset and liabilities from Shahi Sundaram Berhad, she must record all relevant transactions in the existing accounts. Before recording the transaction, record all the balance between all existing accounts. Firstly, the purchase of business must be recorded. When Shahira Sundaram Berhad bought Shahi Sundaram Berhad, he can claim consideration from her. The treatment is similar to the recording of account receivable. Hence, the purchase price of Rm 356,000 should be debited to business purchase and credit Shahi Sundaram Berhad. The business purchase account will be set off at the credit side once Shahira Sundaram Berhad pay for the company she has bought. Next, all assets taken over must be recorded at fair value, which is the market price of the assets and liabilities when it is taken over. The new asset and liabilities should be added in the existing account of Shahira Sundaram Berhad. Hence, assets should be debited and liabilities should be credited. The remaining figure represents the amount for business purchase accounts. Thirdly, liquidation expenses should be recorded by Shahira Sundaram Berhad as she agreed to pay for it. Rm 5,000 should be debited to business purchase account and credited to bank. Then, record the goodwill transferred through absorption. For Shahira Sundaram Berhad, which has no existing goodwill account, she must open a goodwill account to record this transaction. Rm 15,000 should be debited in a goodwill account and credit the business purchase account. Finally, the price consideration paid must be recorded. The seller, Shahi Sundaram Berhad, should be debited at Rm 356,000, then credit ordinary share capital of Rm 300,000 and preference share capital of Rm 56,000. Not to be forgotten, an additional information is available in this situation, which is regarding additional issuance of shares. To record this transaction, bank amounting to the number of payment received, which is Rm 24,000, will be debited. Meanwhile, ordinary share capital are recorded at par value of Rm 1. each amounting to Rm20,000 at the credit side. The differences should be recorded as share premium, which is Rm4,000, also on the credit side, as it is constitutes the profit obtained.